Hey YouTube, what's going on? It's Patrick here at VectorVest. Are you somebody with a smaller portfolio that likes to buy lower dollar stocks because you can buy more shares of it, but don't like the additional risk that's involved with those lower dollar stocks? Well, today I'm going to show you how to find lower dollar stocks, but also reduce the risk involved with those stocks as well. So if you enjoyed today's video, as always, smash that like button and let's get into it. Alright, welcome back. So here at VectorVest, we have an indicator that we call relative safety, or RS for short. Relative safety looks at the consistency and the predictability of a company's financial performance. It takes into account things such as debt to equity ratio, sales volume, business longevity, price volatility, and a few other factors. But to keep it simple out there for everybody, relative safety is basically an indicator of risk. And since most of our proprietary indicators are cast on a scale of 0 to 2, above 1 would show less risk, below 1 would show more risk. So looking for stocks with a high relative safety helps reduce the amount of risk involved with that stock. Well, luckily here at VectorVest, we have a tool called the Unisearch tool, and it allows you to build your own custom searches or scans to find stocks meeting exactly what you're looking for. So as I stated at the very beginning, what we're looking for here today is lower dollar stocks, but that have less risk involved with them. Because most of the time when you're getting into those stocks that are $15, $10, or $5 or even lower, there is a higher amount of risk involved in those stocks because they tend to be newer companies that don't have that longevity that most people would look for to find consistency in the stock, which would have that price growing over time. Well, here at VectorVest, we can filter down those stocks to find exactly what we're looking for. So just to give you a quick run through of what we have here, right now we have stocks less than or equal to $15, has to have a relative safety, as we just talked about, greater than or equal to 1, and then also making sure that they're not ETFs or closed-end funds, which is shown as market here. So all I have to do is go ahead and run the search, and right now it shows me the top 10. If you click on the link down in the description below, you can sign up for the trial. You can build this search on your own, and you can increase that to see the other stocks that aren't showing here that would show if you increase the amount of results you wanted to see. But these are the top 10 stocks based off of that criteria. Well, let's go ahead and take a look at the graph. Because here at VectorVest, we always recommend, before ever purchasing a stock, always taking a look at the graph of a stock. A graph is like a big picture of the stock, and as the old saying goes, a picture is worth 1,000 words. So here we just click on the graph all button at the top, maximize our graph, and what we're looking at right now is the price shown in candlesticks at the top. We have a 40-day simple moving average shown as that purple line. The red area graph down here is the RT, or relative timing, which shows the short-term price trend of the stock. And then below that we get the EPS, or earnings per share. Now, we always state time and time again, earnings is the engine that drives stock prices higher. And if earnings are rising, then we can expect to see price continuing to rise as well. Here at VectorVest, as I've stated multiple times in the past, our earnings per share is a little bit different than anything else you'll find out there. Our earnings per share is not just a historical earnings like you can find on Yahoo or other financial sites. It's actually a blend of historical data plus a 12-month forecasted earnings per share as well. So when you see the earnings per share steadily rising here on a graph in VectorVest, you know that the company is not only growing their earnings, but the major analysts or big money are also expecting them to continue to make money 12 months down the road. Now, when we're looking at a graph, there's two key things we always want to look for here, and that is a steady rise in price from bottom left to upper right. Also, a steady rise in earnings over a 12-month period from bottom left to upper right. Almost like a stair-step pattern. And that's exactly what we see here. Now, when you combine this with the power of the VectorVest market timing, that can help you really supercharge your profits and make sure you're getting into these kind of stocks at the right time and taking your profits at the right time as well. So let's go through just a few of these graphs and just take a quick look at their equity curve, also their earnings as well. So as we can see, UMC comes up as our first stock, nice steady rise in price, earnings also steadily rising. EVC, a nice steady rise in price over the last 12 months. Also, earnings had a big jump up right in the fall of last year and have been steadily rising as well. This stock, just to mention, is trading at 734 and also just pulling back off of that most recent high just a few days ago. But higher highs and higher lows is the basic definition of an uptrend, and stocks that are in uptrends when you're buying into them are stocks that make you money. Let's go take a look at the next one. NHYD, nice steady rise in price from bottom left to upper right, just hitting a new 1-year high just recently. Also, look at that earnings. Earnings are steadily rising, which is exactly what you want to see. If we go to the next one, HBP, price is a little bit more volatile. Stock's about a $6 stock. You can see it has some big gaps up and some big gaps down, but overall still moving higher over that 12-month time frame. Earnings also coming from negative territory a year ago to positive territory as of right now. This is exactly what you want to see. It shows that the company is not only turning a profit rather than losing money on their earnings, but they're also growing them and expected to continue to grow them once again 12 months down the road. And money goes where money grows. Now, because these stocks are lower dollar stocks, expect to see some volatility. And like we see here with the big gaps up and the gaps down from time to time, that does show that volatility of trading these lower dollar stocks. But with the power of RS, it can really help you remove that emotional aspect and worry that you have getting into these lower dollar stocks, and what I like to call the sleep factor. It allows you to basically sleep better at night. Now, one other thing we could do is if we go out of here, get back into the search, is change the sort to one of my most favorite sorts out there, and that is relative safety and combination with CI. Now, CI stands for comfort index. It's basically the stock's ability to withstand severe lengthy price declines. Essentially, it's like the snapback factor. Every time a stock has a pullback, stock with a high CI tends to snap back and hit new highs after a pullback very quickly. When you combine that with the power of RS, once again, that risk factor, you can really help find some fundamentally sound stocks that also have good technicals or good price appreciation looks as well. So let's go ahead and run this and see the list that comes up. And we'll go ahead and graph these stocks here. Just go ahead and maximize it. So once again, UMC coming in as number 1. But then ESXB, nice steady rise in price, gapped up huge just a few months ago. Just moving sideways right now, taking a little bit of a breather. Maybe not the best time to jump in right now, but definitely one to keep on our radar, especially with that rising earnings that we've seen over the last year. FBP, nice steady rise in price, taking a little bit of a consolidation here over the last month or two, but earnings looking phenomenal. And then SVBI, another stock that has a big gap up, continued to run for a few days, and then right now just been moving sideways, taking a little bit of a breather after the stock has gone from about $6 to $12 over the last year, basically 100% gain over the last year. It's okay to see a little bit of a sideways move. Maybe wait for it to break out of this sideways channel before jumping on board, but definitely one to keep on your radar. And then we'll take a look at one more here today, and that is BOCH. Nice steady rise in price, having a pullback as of late, but maybe creating a good buying opportunity to keep an eye on here. Also looking at the earnings steadily rising, telling us once again, this company is not only making money, but big money is expecting them to continue to make money 12 months down the road. So as always, if you've enjoyed today's video, smash that like button. If you're not already subscribed to the VectorVest YouTube channel, make sure to subscribe now. Click that notification bell so that way you get notified of all the new content we have coming out for you. And if you want to see the power of this on your own and you're not already a VectorVest subscriber, click on the link down in the description below and sign up for that trial and put the software to the test on your own. I'm a big fan of the saying, seeing is believing, and once you put VectorVest to the test, you'll see how powerful it can be to really help your portfolio grow and keep you on the right side of the market. So until next time, take care, adios, toodles. Yeah.